Some have described this as having the makings of a Grisham novel, but ultimately what we've got here is damage control measures put in place by Credit Suisse. It all started with a personal disagreement between the CEO, Tidjane Thiam, and the head of the wealth management business, Iqbal Khan. They were near neighbours in a Zurich suburb. That spat eventually led to the head of wealth management leaving the business, crossing the road here in Zurich to UBS, at which point the COO of the company appears to have brought in private investigators to monitor his movements to make sure he wasn't trying to poach staff. Unfortunately, that blew up in the bank's face when Iqbal Khan thought he was being followed here in Zurich and confronted those private investigators. He then complained to the management. An investigation was launched internally, and that has resulted in both the COO leaving and the head of security going. The chairman, Urs Rohner, says they want to draw a line under this now and they think they should move on, but the CEO will not be leaving the company. I asked the chairman then in the press conference what confidence investors could have that the COO was actually in control of the business if he never knew that this surveillance operation was being carried out. Let's hear what he had to say to me.
Obviously, this was a key focus of our investigation. We looked at it, and obviously we base our decisions on the evidence we have. We have obviously discussed this point with him. The investigators asked him or interviewed him about this. We have absolutely zero evidence that he was informed about it.
Now, he will want to draw a line under this, but there are some loose ends still. There is a police investigation into Iqbal Khan's confrontation and potential altercation with some of those who were following him from the private investigator's office. We understand that there may have been a suicide of a security officer working for the bank in relation to this story. This morning, the chairman only said deep regrets and passing on best wishes to the family, but we have very little other information about that at this stage. And there are still some questions, I think, as to how credible the fact is the CEO did not know anything. The investigators who looked into this whole story say that there was some deleted communication on other social media platforms, which they were not able to look at and which at this point appear to be lost. For the time being, though, I think we just need to keep an eye on the market reaction to get a sense of whether investors and major stakeholders are buying into the story. Back to you guys.
Geoff, even if we believe that conclusion, that Tidjane Thiam had no idea about this particular story, how much backing does he have amongst the board and from investors? I mean, he was a bit of a star hire when he joined a few years back. Has his tenure been that successful?
Well, I think it's been a very difficult environment, as you know, for the European banks. And if you look at the share price performance of Credit Suisse since he came into the business in March 2015, that doesn't tell you a great deal about what he's been doing. The share price has ultimately halved, but then the Euro Stoxx Banks Index and rival UBS haven't exactly set the world alight either. So all of the banks have fallen over the period that Tidjane's been in place. But I think there are those who believe he's done a good job of reducing the risk-weighted assets in the bank and moving it away from the riskier trading business and focusing on wealth management, specifically in Asia. And herein lies the rub about this story, Wilfred, because a lot of that success, the doubling of the profit from the wealth management business, happened under Iqbal Khan. The fact that he is now leaving will obviously cause some head-scratching as to whether Tidjane Thiam can continue with this three-year turnaround program and deliver more stable quality earnings that investors will feel comfortable with. But as we understand it, companies like Harris Associates that have about a little over 8% of the business were throwing their weight behind him remaining at the company. And quite frankly, at this stage, it's difficult within the bank, or as you look around European banking at the moment, to find anybody who could step into the shoes and do a better job at this point? At least that seems to be the market view, Will.